Credit. It's more than just a plastic card or a number on a screen. It's a powerful tool that, when used responsibly, can pave the way to financial freedom. Think of it as your financial foundation. A strong credit history opens doors to lower interest rates on loans, better credit card offers, and even increased chances of landing that dream apartment. It's about building trust with lenders and demonstrating your ability to handle debt responsibly. Imagine this. You're ready to buy your first home. You've saved diligently for a down payment, but you need a mortgage to seal the deal. This is where your credit score takes center stage. A good credit score tells lenders you're a safe bet, someone who's likely to repay their debts on time. The result? You're offered a lower interest rate, potentially saving you thousands of dollars over the life of your loan. That's the power of good credit in action. But it's not just about big purchases like homes. Good credit can also save you money on everyday expenses. Car insurance, for example, is often influenced by your credit history. Insurance companies use credit-based insurance scores to assess risk, and those with higher scores often enjoy lower premiums. It's another example of how responsible credit management can translate into real savings. Remember, building a solid credit history is an ongoing journey, not a sprint. It requires discipline, patience, and a commitment to making smart financial choices. By understanding the importance of credit and taking steps to manage it wisely, you'll be well on your way to unlocking a brighter financial future. So, how do you actually build good credit? It's simpler than you might think, even if you're starting from scratch. First and foremost, pay your bills on time, every time. This single factor carries the most weight in determining your credit score. Set up automatic payments or reminders to ensure you never miss a due date. Next, keep your credit card balances low. Credit utilization, the amount of credit you're using compared to your total available credit, plays a significant role in your score. Aim to keep your balances below 30% of your credit limit. For example, if you have a credit card with a $1,000 limit, try to keep your balance below $300. Diversifying your credit mix can also be beneficial. This means having different types of credit, such as credit cards and installment loans. Don't feel pressured to open multiple accounts at once, though. Start slowly and build your credit history gradually. Finally, be patient. Building good credit takes time. There are no overnight fixes or shortcuts. Focus on establishing responsible credit habits, and your score will reflect your efforts over time. Why is a good credit score so important? One word: interest. Interest rates can make a huge difference in how much you ultimately pay for things. A good credit score is like having a golden ticket to lower interest rates on loans and credit cards. This can save you thousands of dollars over time. Think about it this way. When you borrow money, you're essentially renting it from a lender. The interest rate is the rent you pay for the privilege of using their money. Just like a landlord might charge higher rent to a tenant with a history of late payments, lenders charge higher interest rates to borrowers with poor credit. They see these borrowers as a higher risk and want to be compensated accordingly. On the flip side, borrowers with good credit are seen as lower risk. They've demonstrated a history of responsible borrowing and repayment, so lenders are more likely to offer them lower interest rates. This is why it's so important to build and maintain a good credit score. It can save you a significant amount of money over the life of your loans. Now here's where things get interesting. While credit can be a slippery slope leading to debt, it can also be a powerful tool for building wealth when used strategically. The key difference lies in how you use it. Instead of using credit for frivolous purchases or to live beyond your means, focus on leveraging it for investments that have the potential to grow your wealth over time. This could include things like investing in real estate, starting a business, or even investing in the stock market. Of course, it's crucial to thoroughly research any investment before jumping in and never invest more than you can afford to lose. However, by using credit wisely, you can potentially accelerate your path to financial freedom. Using credit for investments requires careful planning and a solid understanding of the risks involved. One popular approach is leveraging credit to purchase rental properties. By obtaining a mortgage and renting out the property, you can use rental income to cover the mortgage payments and potentially generate positive cash flow. Another option is using credit to start or grow a business. This could involve obtaining a business loan or using a business credit card to finance startup costs or inventory. Again, it's essential to have a solid business plan and a clear understanding of your financial projections before taking on any debt. Remember, using credit for investments should always be a calculated decision. Thoroughly research your options, assess the risks, and ensure you have a solid plan in place before taking on any debt. While credit can be a valuable tool, it's essential to be aware of the potential risks and take steps to mitigate them. The biggest risk, of course, is accumulating unmanageable debt. High-interest credit card debt in particular can quickly spiral out of control if you're not careful. To avoid falling into the debt trap, it's crucial to live within your means, create a budget, and track your spending. Only charge what you can afford to repay in full each month. If you do carry a balance, make more than the minimum payment to pay it down as quickly as possible. Another risk to be mindful of is identity theft. Protect your personal information by shredding sensitive documents. Monitor your credit reports regularly. Be cautious about sharing your information online. Mastering credit is an essential aspect of achieving financial success. By understanding how credit works, building a good credit score, and using credit wisely, you can harness its power to your advantage. Remember, credit is a tool. Used responsibly, it can help you achieve your financial goals and build a brighter future. Take control of your credit today, and you'll be well on your way to unlocking a world of financial possibilities.